But let's start off with a little bit about your background and what led you to Dash.
Sure. So I have a pretty traditional Wall Street background. I was a consultant with McKinsey for 7 years in their financial services practice, became an associate partner with them, and then left to join a hedge fund where I focused on the payment space. And we had a private equity fund, public markets fund, and a long-short fund. And so I covered the gamut from companies that were successful and small startups all the way through to large companies that are failing. And so, you know, there's money to be made everywhere.
Yeah,
so
absolutely.
Basically covering that whole space, as well as a little bit of FinTech.
We have a
visitor. We have a visitor. And so, you know, going deep into the payment space like that and really spending years talking to some of the most intensively intelligent people in that industry on a daily basis really just was an incredible experience. And it was during that time that I first came across Bitcoin as a payment method. And it started to make a bit of news in industry press. It hadn't gone mainstream. Nobody knew about it.
What year did this?
2013.
Okay.
2012 probably is the first time I ever heard the word Bitcoin. And I felt like I was a bit late. Like this had already become a thing, and I had just started hearing about it. But I started dabbling in that and eventually realized there were a plethora of different coins out there. And by early 2014, I was actively investigating all of these coins and trying to figure out what made them different. Because when I looked at Bitcoin as a payments expert, I immediately identified that it had attributes in a combination that no other payment method had, and had applications, but it was deeply flawed from a payment perspective. Whoever designed it did not bring payments industry best practices to bear. And there were obvious mistakes. And so I was looking for solutions to that. And at the time, I think pretty much the entire space was dominated by mathematicians and coders, and nobody really understood it from a payments perspective. And so as I dug in, I was very disappointed with what I found. Most of them were copies and pastes of each other.
And I've actually heard that a lot with copies and pastes.
Mm-hmm.
So how did working for Dash, how did that opportunity present itself?
So early 2014, I'm digging around in various projects and just looking at what they're trying to accomplish. And I came across the project at the time was called Dark Coin. And it was called that because the first feature they were trying to roll out, or the lead programmer was trying to roll out, was a privacy feature. And it was meant to allude to the fact that you could not follow transactions on its ledger. And my first instinct was, well, this isn't going to go mainstream because it's, you know, the way it's positioned.
It's in the dark.
But it was the only project I could find that was focused on any user-facing features or functionality that anyone would care about. And so I just became very interested in it and started following it. And I just so happened to be moving to Phoenix in 2014.
And where were you before that?
New York.
Oh.
So I'm
Close to
moving to
West Coast.
Phoenix, and I learned that the lead programmer is based here. And so I set up a meeting, and I went and met with him over a drink, and I started espousing all of my issues with the space, and he really took to it and agreed with my assessments, and pretty soon he was incorporating a lot of these things into the project. I started spending more and more of my time on Darkcoin, and eventually by 2015 it was rebranded as Dash. We'd rolled out our instant transaction functionality by that point, and I just fell down the rabbit hole. And eventually I wound up quitting my job at a hedge fund in New York. I was commuting back and forth at the time. This is insane. I got it.
Did you get it?
I just got it.
Wow.
Sorry for the run.
Man down.
All right,
Now we can continue.
now we can concentrate,
Yes.
all of us.
Yes.
I know you were following the fly.
I totally was. He was on your hair too. Okay.
So, by 2015, we'd rebranded, focused on all these other issues that were facing cryptocurrencies. And when I quit my job, everyone thought I was absolutely insane. This was prior to the 2017 bull run, way prior.
Wow.
And I was quitting a well-paying hedge fund
Just gonna say, must be
job
well-paid.
to join Dash, which at the time could afford about $700 a month. And so I was just passionate about it, and I wanted to pursue it for personal reasons and see what we could do.
And can I mention, because I know there's a lot of people that are building startups here, his journey with Dash started with just reaching out for a cup of coffee. So I think there's a lot of power in that. So, yeah.
Networking is a skill. It doesn't come naturally to just about anyone,
Yeah.
and it is a skill well worth learning. It matters the way that you reach out to people. Everybody likes to be flattered, and everybody likes to be told that, hey, I'm just looking for your advice. I'm looking to you as an expert, and I want your opinions. Everyone loves sharing their opinions, and if you reach out in that way, almost anyone will meet with you.
I think my outreach was a cool LinkedIn message to you.
Yeah.
Yep. So.
And you probably flattered me and told me what a great expert I was. So here I am.
Shut a compliment.
So,
you're in Dash, you're making $700 a month, living in Phoenix, which I think you could actually do in Phoenix, definitely not in New York. Lead me to the journey of you becoming CEO.
So, yeah, I joined in the spring of 2016, and I didn't want to just join as a team member. That's kind of how the team was at the time. It was just a bunch of basically volunteers that were spending part of their time or all of their time with very little pay in order to contribute. And the thing that I noticed right away was that the issues ran far deeper than, just having good finances, but it was a good place to start, and it was an area that I knew well. And so I said, I'm going to join as director of finance and help with structuring how the money is being spent and the projects that are coming in. And my first day, I kind of asked the question, okay, well, how was the money spent last month? Well, we didn't use the budget that was available in the Dash network last month because everybody thought that someone else would use it.
So nobody
put a proposal up. And the month before that, there were too many. And the team members, individual team members had put up different proposals that all exceeded the available funding. And so the first thing I said is, okay, well, where is the plan? Where's the list of things we want to get done and the costs and all of that? And the answer was, well, there isn't one. So I said, okay, let's start by creating that. Let's put a list together and rank them against our strategy. Where's our strategy documents? Oh, we don't have it. So I kept backing up off of each question and realized they need something more fundamental than this. They need something more fundamental than this. And so it was just jumping in and taking a leadership role and really organizing everything that was needed in order to come up with a good plan and therefore a good financial plan to accomplish that. Well, in the process of doing this, I'm essentially taking on more and more of a leadership role within that.
Sounds like you started from scratch.
Yeah, I kind of made the role. And so by the, winter, essentially everything was running through me, or people were pseudo-reporting to me on these issues. And at that point, I think everybody just decided to make it official. So
that's the way to become CEO.
You know what? It was the fact that there was a leadership vacuum. And so I think almost anyone with strong leadership skills could have stepped into that situation and would have been drawn into that direction. I don't have a history as a CEO prior to this position, certainly leading teams, but not at this scale.
So what would you say is your leadership superpower that you could kind of share with the group, especially that founders need to have?
I think that the number one skill that you need to have when you're leading an organization of a substantial size, I think when you're in a team of 10 or less, this is less important. But if you're going to scale, you have to recognize that you either need to develop these skills or pull someone in who has them, which is the ability to counsel and develop people. Ultimately, you become more and more of a counselor on how to develop the team, how to develop other people's leadership skills. And if you don't have those skills, they can be taught. You can learn them. But it takes you stepping away from the job and getting that training and experience and reaching out to other leaders in order to get their advice on how to lead and how to develop other people in their roles. And if they're not right for the roles, how to recognize that, how to counsel them out, how to move them into other positions. It just becomes more and more a task of just making sure the team itself can remain efficient, as opposed to being the one to do everything. The number one mistake you can make is, as your team grows, continue to try to hold on to every decision-making power and be the gateway for things to get done. And that doesn't scale.
And then sometimes it's hard to let go. But
It is hard to let go.
So we're going to switch.
yeah. We're going to switch gears. I would love for you to define two things for me in the most elementary, relatable, non-technical way. The elementary school teacher in me really needs this.
Explain it like I'm 5.
Yes, please, explain it like I'm 5. And I know some people are going to appreciate this. Cryptocurrency we'll start with, and then blockchain, because it's been explained to me many times, but I'd love to hear it again from you.
All right, so cryptocurrency is a fancy word for basically a digital currency. Its native form is digital. And it does rely on cryptographic processes, which is where it gets its name. And so very complicated math, but you don't need to know that for your explain it like a file. What common pushback I receive from people is, well, how can this be money? It's just a bunch of ones and zeros on a computer, and that can't possibly have any value. And my response is, money is whatever we as society or as groups of people say it is. Money has been all kinds of things throughout history. It's been shells, it's been strips of leather signed by the king, it's been little discs of metal of varying quality. It's been pieces of paper issued by our governments. It's been all kinds of different things throughout history, and usually, at any point in history, there are multiple different forms of currency that are being exchanged at any one point in time. And it's actually a relatively rare point in history where we don't even have a choice in currency. If you're in the United States, you're using the dollar on a day-to-day basis. But even in the United States, up until the early 1900s, there were Spanish pesos, bank-issued currencies that were circulating in certain regions of the country. And so it's only very recently that we've had a unified currency within any geographic area of the world. And because this is a social construct, the reason you accept a dollar from me is because you're relatively certain that the store will accept it. Yeah. And it's gotten to the point where we don't really think about it much. So why do we need a new currency? And I think that the answer is that cryptocurrencies, as I said earlier, have attributes that no other currency has. It is far more scarce there are a limit in the code as to the number that will ever be created of any given currency, at least over a given period of time. That's not true with government-issued currencies, and if you're living in Venezuela right now, you're suffering from that consequence. So they're scarce, they're divisible out to as many decimal places as you want, so they're good for micropayments, something we haven't had a need for in the past. They're durable. You can't really destroy a cryptocurrency. It exists on thousands of servers throughout the world. It's instantly transferable. I can actually memorize a seed phrase, a phrase of 12 words, and walk across a border in the middle of a war, cold and naked, and I will have my money on the other side of the border if I manage to cross it. And so there are just these attributes that don't exist with any other store of value or payment type. And by the way, it has all the attributes of cash, meaning I send it to you. I can't do a chargeback on that. Yet it can be sent over the internet. No other payment method has those attributes. So it has a place in the world and can facilitate transactions no other payment method can. Now, the most famous of which is Silk Road, which doesn't conjure very positive connotations, but there's all kinds of different legal purposes for this, including high chargeback industries, cross-border transactions, where there's usually gateways with really high fees associated with them, your bank, taking advantage of their position in that transfer to extract the high fees. There are use cases where no other payment method can work, like the legal cannabis industry, where Visa and MasterCard and all the others refuse to service them. And so there are many, many different use cases for this that are perfectly legal in nature that are not serviced well by existing payments infrastructure.
I think you broke it down to me when you said the other payment types before coins. I forgot about leather and that kind of thing. So why do I have to be fixated on the dollar? So
yeah, I think it's an exciting time because it's the first time that we all have a choice in what currency we choose to use. It's something we just have grown up with and take for granted that, oh, what money are you going to use today? That isn't a question that crosses most of our minds. But if you're living in Venezuela right now, you're asking that question every day.
I'm going to have you tell a little bit more about Dash in Venezuela, but before that, I completely forgot. We do have two $50 gift cards. All you have to do is hashtag StartupGrind and yes, PHX in one of your social posts, and Melissa and Christina will be picking winners, so sorry, I forgot that. Tell me a little bit, we'll get to blockchain, because I remember that, but tell me what's going on in Venezuela and how Dash is playing a part in that.
So, Venezuela, as I'm sure you've seen in the news, is undergoing hyperinflation, million+% inflation rate. If you had bought $1 million worth of the bolivar, the local currency there, back when Maduro took office, you would have somewhere around 15 cents left. Most of us can't wrap our minds around this. The currency drops in value around 4% a day. So if you were to run a credit card transaction, by the time it comes through, it's worth 10% less by the time it would hit your bank account. And it's not so much the hyperinflation that is broken, it's that all payment methods are broken. The infrastructure is broken, the equipment doesn't work well for a lot of industries because they literally run out of zeros on the equipment for certain transactions. There are transaction limits that the banks have put in place where you can't spend more than $100 on your credit or debit card. So if you're making a larger purchase, like an appliance, you actually need to conjure a bunch of friends and family down to the appliance store to help you purchase. There are power outages. There's all kinds of issues that plague everyday payments. And you'd think, well, wouldn't people just find ways to adapt? And the answer is no. They're simple transactions like renting a beach umbrella was a challenge for one of our team members when they went traveling there to visit their family. Our business development manager for Latin America is from Venezuela. And he said he got down to the beach and they were writing down people's phone numbers on pieces of paper, and it was an IOU for the next day. They would call you and have them do a bank transfer because you couldn't carry that much cash down to the beach, and even if you could, they couldn't carry it all out at the end of the day. It would be garbage bags full. And so, and phones didn't work down there, so literally no payment method was an option down there. So what we thought we were solving was the hyperinflation issue down there, but what we're actually solving is the ability to transact. And so we've signed up between 2,500 and 3,000 merchants, mostly in the capital city of Caracas, to accept Dash. It's the most widely accepted cryptocurrency in the country. And you can live off of it in Venezuela. You can, there are families living in Miami that are sending remittances back home in Dash, and they're using that to spend. And that growth is incredible. We had around 600 merchants at the end of February last year. At the end of February this year, we had around 2,700. And so that's pretty rapid growth in merchant acceptance. It's really exciting for us. And we've actually gotten to the point now where it's not mom and pops that are signing up, but we're working with point of sale companies that are in thousands of locations, and we're working with corporate clients. So we just signed up Church's Chicken across the entire country, 13 locations all in one go. And so we're starting to get corporate clients at this point that probably wouldn't have considered taking cryptocurrency before. And it's really interesting to see this impacting people's lives. A lot of people that kept their money in bolivars lost everything. The people that put it into cryptocurrency, it saved their families.
That's pretty impactful.
Yeah. It feels good to be a part of something like this.
Absolutely. Well, now on the blockchain, this is not going to sound as exciting as Venezuela. So can you just break down blockchain for me? Because I've heard it described so many times, but I really haven't grasped it yet.
Yeah, so blockchain is the technology that underlies most of these cryptocurrencies. And it is basically a ledger of inputs and outputs being sent from and to different addresses. You've got to be kidding me. Another one? I just saw.
They like you.
Yeah.
What did you remember about Startup Guide? The flies.
Yeah, the flies. So the blockchain ledger, though, is unique from a normal database, a ledger-based database, in that it is an append-only database. The ledger is appended in blocks of data, and they are chained together using cryptographic methods, such that if I go back to an earlier block and try to change anything, it invalidates every block thereafter. And so that's where the word blockchain comes from.
I'm envisioning it now. It's helpful.
And what people struggle with is, well, how is it appended in that way? What makes it do that? And the explanation I like to give people is that each block is connected to the previous one by a math concept called cryptographic sharding. And that sounds like a fancy term, but it's just a math problem that when you send an input through it, it spits out an output. But unlike an algebraic problem or something like that, the output is completely random. And you can put anything through it. You can put the number 1, or you can put the King James Bible through it. It doesn't matter what you put through it. Out the other end comes a unique string of characters, and a very short one. And if you change anything about the input, the output changes completely. Nothing about it is the same. So we think of algebra problems like, okay, what's the square root of 20? You probably don't know it.
You are right.
But you know it's greater than 4 because the square of 4 is 16. And you know it's less than 5 because the square of 5 is 25. And you could hone in on it by saying, okay, well, is it 4.5? High or lower, you know? And you can hone in fairly quickly. And this is the kind of math we're all familiar with. But this type of math, it's a lot like taking a gallon of paint and sticking some coloring in and having the output be completely random. So I add a bit of blue, it turns pink. I add a bit of yellow and it turns orange. I add a drop of blue and it's suddenly hot green. I don't know. The only way to solve this problem and get the color that you want is to try all of the combinations until you find one that matches close enough to what you're looking for. And what the Bitcoin blockchain does is, see, it likes you too. Maybe it's not dead, no, it's still there. What the Bitcoin blockchain does is it changes the difficulty of this math problem over time such that it ensures that a new block is found about every 10 minutes, give or take. And that allows the network time to settle out and agree that this is the current state, that this is the longest point of the blockchain at this point in time. Because if you had blocks being created all over the network at once and relaying all over the place, it would be a mess. And it also makes it really hard to fake it. The only way to solve these problems is through a process they call proof of work. Well, that's just trying all the possible inputs to this math problem until you find one that works. And so you can't just fake doing that. You have to actually do it. And all of this comes together, all of this technology comes together to ensure that a new block of transactions is confirmed to the blockchain every 10 minutes or so, and that no one can go back and change it without having more computing power available to them than the rest of the entire Bitcoin network. And so far, that just hasn't happened. And so it's very powerful. What it creates is a source of truth. And I've argued that the Bitcoin blockchain is so hard to replicate that it is probably the best source of truth in the known universe. If I record,
that's a good quote.
Yeah,
right there.
If I take a piece of data, say my will, and I send that through one of these hashing algorithms, and I record the outcome on the Bitcoin blockchain in 2019, in the year 2023, that would provide absolute proof that that document existed on that date. I don't care if there's a video that shows that it doesn't. I don't care if there are 100 eyewitnesses. That data could not exist on the Bitcoin blockchain back in 2019 if it didn't exist. And so I would argue that it is the #1 source of truth. And this is why people are doing exactly that. They're hashing information and storing it on the Bitcoin blockchain because it is the #1 source of truth in the universe. There are other blockchains, yes. There are other blockchains, but the Bitcoin blockchain has the greatest amount of computing power securing it. It is not the only way to secure a network. The Dash network uses alternate methods to secure the network in addition to proof of work. So we have a lower hash rate.
This was leading into my next question.
Yeah.
Bitcoin versus Dash. Thank you.
Yeah. Maybe I should pause here, but there are various ways to secure it. Proof of work is one way. There are other methods called proof of stake. Dash does it a third way that we don't really have a good name for yet, but we've got a variety of technologies that do it in different ways. But these networks are very, very hard to, I would say impossible to hack with known technology. There may be technology out there in the future, like quantum computing or something that could penetrate portions of it. But it is very, very difficult to replicate the level of security. This technology has been exposed to the internet since 2009, and no one's hacked it.
Wow.
No firewalls, nothing protecting it. It is open to the world, and it is hack-proof.
That's a long time.
Yeah.
Yeah. Well, that actually leads me into, because you said when you were a big believer of Bitcoin and you saw some holes. So how does Dash fill those holes?
So in order to gain mass adoption, a new payment method on the consumer side needs to have certain attributes. It needs to be faster and cheaper than the alternative for that particular use case. It needs to be easier to use, and it needs to provide switching incentives. You can probably get away with 2 of the 3, but I think Bitcoin screwed up all 3. It's not faster and cheaper than, say, a credit card or any other payment method. It takes a good 10 minutes to an hour to confirm a transaction. That's good enough for online. If you're placing an online order to be delivered, as opposed to a service, like you want to download something. But it doesn't serve very many use cases very well.
You can't pay for your beach umbrella that way.
Yeah, you can pay your electric bill, but certain things. The second, ease of use. It is, faster and cheaper, I said. It's also more expensive. Credit cards are free to the consumer.
Yeah.
And other payment methods are usually free. About the only one that it undercuts is an international wire transfer or domestic wire transfer. So on the ease of use, if you've ever tried using it, no one can figure it out without some training.
Anyone tried using it?
A few.
Oh,
It's not intuitive. There's long cryptographic addresses that you're exposed to. What happens if there's a typo? There's uncertainties there. So yeah, it's scary for a lot of people. You certainly can't expect your mom to sit down and be able to use it. And then on switching incentives, there's actually disincentives to use Bitcoin. No other payment method is the transaction fee on the sender. And so with Bitcoin, I, as the sender, am responsible for the transaction fee, whereas credit cards are going to give me 2% cash back. PayPal gave me a sign-up bonus. Like, all of the successful payment methods provide incentives for the consumer to switch. There's actually a disincentive. By the way, I also incurred fees acquiring the Bitcoin in the first place. And so I just looked at it and said, well, this isn't going to reach mass adoption, not in its current form. So a lot of what we focused on are those 3 issues. We haven't solved them all yet, but we have a path towards solving all of them. When it comes to the developer side or the merchant side of electronic payment methods, there are certain things you need to have. You need to have integrations into services. There's no one to pay for that in the case of Bitcoin, unless someone who owns a lot of Bitcoin decides to gift some money to have that done. The second is you should have ease of use for the programmers to be able to integrate very easily accessible APIs and things like that. There are no APIs for Bitcoin. You have to host your own node or pay a service to host one for you. You have to use goofy interfaces in order to interface with the network unless you're paying for an API service that's built on top of Bitcoin. It's not easy to integrate. And I think that there needs to be incentives for the merchants as well. Really, there isn't. Right now, there's actually disincentives to integrate Bitcoin. If you're an online service and you integrate Bitcoin into your checkout screen, you actually see conversion rates drop. And the reason is because people get intrigued. What is Bitcoin? Oh, how do I use it? Instead of entering their credit card information and buying from you. And so
you go down the deep scary web.
There are a few companies that accept it for apparently philosophical reasons, like Overstock, their CEO is very passionate about this, but I guarantee they're
You probably own a lot of Bitcoin.
But we haven't seen Bitcoin get picked up by the top 100 e-retailers, and the reason is because they're disincentivized to. So unless you're going to solve that problem, you're not going to see merchant adoption. So all of these issues need to be dealt with. Absolutely every adoption factor for mass scale is the opposite of what it should be with Bitcoin. So what are we doing about it? Well, we're very focused on ease of use. We've already introduced instant transaction, which addresses the speed issue. It allows us to be used at the point of sale. So in Venezuela, people can actually go to a store and buy something with it and walk out the door instead of waiting around for the transaction to confirm. This is where 97% of all global transactions still take place, in a store. So you really have to address that use case. The second thing that we're focused on is the ease of use. This is, we've had to completely re-architect the way that Dash works and the blockchain works and the protocol works that underlies everything in order to accommodate new transaction types, store data within the network itself so that you can create a username. You can friend other users and have a contacts list stored within the network that I can access from my phone, I can access it from my computer.
We're used to it.
Like
Venmo and PayPal.
what you're familiar with to make this relevant to you. And now I can friend you, and I don't have to see a long cryptographic address. I'm just sending a payment to Lauren. It also allows ease of use with the merchants. I can go to a merchant checkout page, I can enter my Dash username, Ryan, and my phone will buzz and say, hey, do you want to make this payment? And do you want to send your shipping address, your phone number, and your email address for the purchase? I click yes, and all that data goes straight through the Dash network. I don't have to type anything in. When you do that, conversion rates jump from around 40% with credit cards that you have to type in to around 87%.
I'm not going to lie, if it doesn't show up auto, I might skip it.
Yep. Or you don't have it with you. It's in your purse or whatever. And you've got to go get it. And you're on the sofa and you're watching TV. I'll do it later. And you never make the purchase. And so these types of issues need to be dealt with. Switching incentives, we're switching the cost, the fees over to the merchant side. And we're also introducing longer term an incentive program that's paid for by the merchants. So they save money on these transactions. Why not pay less than they would pay to a credit card company, but more than I get from my credit card company, and have that be dashed back or something. So we're going to be rolling out loyalty and rewards type programs that the merchants can optionally sign up for. That'll provide that switching incentive. And there's certain industries where the incentive is high, like in cannabis or in online gaming. These are industries with really high chargeback rates or can't accept payments at all. Cash handling costs are huge for cannabis, so they can pass those savings on to the customer. And then on the merchant side, I've already talked about the conversion rate improvement that we can bring, but we're also switching the network so that it is API based. They don't have to host their own infrastructure in order to integrate with Dash. They can just access it through standard protocols, HTTP. They can build things that they want to on top of the network, store data within the network, send data to and from their customers through the network, and build a very customized experience that they can't do with anything else, including credit cards. And so we're introducing features and things that merchants will love and incentivize them to adopt. So all of this stuff is coming as part of a package we're calling Evolution, which is scheduled to be released this year.
Ooh, that's exciting. Heard it first here. I think I have about, I'm going to ask one more question, do a little rapid fire, so think of your questions, because you guys are on next. I'm going to go a little bit late, till 8:10. There's a couple places or banks that JP Morgan, they just introduced their first, what you call stable coin. So people are picking this up. It's becoming more, people are really adapting to it. I think the change is coming. Can you tell me a little bit about JP Morgan, I think we said Bracket and Fidelity, what they're doing in the space?
Yeah, so there's news happening all the time. Despite what's happened with price and the fact that it's fallen out of fashion with speculation-based headlines. There's a lot being built around the industry right now. One of them is JP Morgan, who has very publicly—
I was just going to say they shamed Bitcoin.
Yeah, and called it a scam.
But we're going to create our own.
Yes. Basically what they're doing is they're saying, hey, we have assets, we have US dollars sitting in our bank. We're going to digitize those and allow people to send them around like they would a Bitcoin. But, you know, essentially—
They're still dollar backed.
Yeah, and it's a permission-based blockchain, which means that only if you're one of their institutional clients or major corporate clients can you even sign up. And so they can track, you know, where the money is going and everything. So it is a permissioned system, and it's essentially taking the dollar and giving it all the attributes of cryptocurrency. And so—
Slow roll into cryptocurrency.
Yeah, and so it's divisible out to more decimal places than the penny. It can be transferred across border without, you know, delays and without high fees and all of these types of things. So they're definitely dipping their toe in the water and allowing a subset of their clients to begin to use this type of technology. They're also— all the banks are experimenting with blockchain more generally, which can allow like one database where there used to be several. And that database can be maintained not only by their bank, but by other banks that are part of a consortium. And so it can bring efficiencies to them. So they're looking at it from that perspective as well. BACT that you mentioned, it's B-A-K-K-T.
I think I said bracket.
Is a new exchange platform being launched by Intercontinental Exchange. They own the New York Stock Exchange and about a dozen other global commodities, futures, stock exchanges, things of that nature. And so they're like the largest in the exchange space. It was supposed to roll out this quarter, but I don't think it's going to happen.
Well, we got 4 days.
Yeah, and that's expected. I mean, regulation is a huge issue to overcome yet, but they are working on it. And
Q2.
yeah, and we have seen Bitcoin futures launch. There's a number of applications for Bitcoin ETFs. So that area of the financial system is beginning to develop in a serious way. And there are other regulated exchanges at this point that, you know, many of which even have the New York BIT license in order to operate. So that area is beginning to develop in a serious way, and the biggest players in the industry are getting in. That should tell you something. And then the last one is Fidelity. Fidelity is the 4th largest asset manager in the world. They have around $3 trillion under management or something like that. And they service institutional clients and individuals. And they have a blockchain division that is rolling out, or digital assets division. And they're rolling out services. Customers are already live on it, but it's a select set of customers. And they're calling it their beta period. They're testing it. And their aim is to roll this out to all Fidelity clients. That means you will be able to buy and custody your digital assets with Fidelity directly through your regular brokerage portal. Institutional clients will be able to, you know, make large OTC purchases and the full 9 yards and store that with Fidelity as custody. And so these are major.
These are major players.
These are major players. They would not be making these types of investments without thoroughly analyzing this market and determining whether or not this has a likelihood of playing out in the future. And I think if you're truly objective about it, and you ask yourself, what is a superior form of money? What would I rather use? One that the government at any point could inflate away the value, that is not peer-to-peer, requires me to go through intermediaries in order to send it to anyone, who charge fees along the way, is slow and expensive? Or would I rather use this digital form of money that is natively digital, that I can own and possess myself or custody with a service of my choice, and is extremely low cost and efficient? Here's where I think things are going. And I don't know if this was a question.
No, we have time for it. I asked him what he saw in 2090. What's
Yeah.
the world going to look like? What are payments going to look like?
So the first question you asked me was, what does the future look like? And I asked her, how far out in the future do you want me
I
to
said
go?
2090.
And she said 2090. Oh, okay. Well, that's quite a ways. I'll be dead. But here's where I think things are headed. We've seen many things get digitized in our lifetime. We've seen newspapers get digitized, movies get digitized, we've seen letters get digitized, we've seen like any number of different industries get digitized. And what happens when they get digitized is the costs go to near zero for hosting these. Nobody here probably gets the newspaper anymore. There's probably a few, but there's one. I admit to being one of them.
Okay.
I actually do still get a weekly paper, but most people don't. News streams to you all the time. You have CNN on your phone and it just streams you the headlines constantly as they're happening. Like there's a shooting event happening right now and you find out about it. And that information comes to you at almost no cost. Well, no cost, no incremental cost. It's live, and it's constantly streaming. You yourself have become a source of news. You send out tweets all the time. You just asked your audience to tweet out, what that you're here to your audiences, and we're all a source of data. The same thing is true of on-demand media. We're able to stream things constantly to any device, no matter where we are in the world, at almost no incremental cost again. All of this information has just become flows in our lives, and it largely fades into the background. You don't think about how you're going to acquire your movie. You just pull your phone out. You might have to choose which streaming service to use, but even that will probably go away. And basically, I think that all the same things are going to happen to money. Money, when a money transaction goes to near zero cost, there's no reason for you to pay a monthly phone bill. You could pay by the minute or by the data download for the services that you're rendering right there. So I could negotiate my phone could negotiate a 1-minute contract with AT&T, make a micropayment in the data stream that's my voice, and the very next second switch to T-Mobile and start paying them in micropayments. You could get paid by the hour. You could have tiny deposits into your account by the hour or by the minute. You could buy an appliance that includes the electricity for the first year in it, and it would make micropayments in your name to the, through the electric grid to the electric company to offset your phone bill. And it'll show up as a line item like, well, actually your electric bill will go away too.
Yeah.
I didn't think of that.
That's
But all of these payments will become streams. And on top of that, you as an entity will not necessarily be the one in control of your money. Your car will, well, you won't have a car, but the cars that's driving around on the street will be able to pay a road tax to the city that it is driving in at that moment in time based on the current congestion rate by the micro mile, like every second paying a micro payment. It will be able to pay for its own maintenance. You could have AI fleets of cars that have their own money and are paying for their own services and determining when it's time for them to go to the scrap heap and reap the rewards from that. So I think the bottom line is these giant payments are going to go away. You are no longer going to have large payments that you make on a weekly or monthly basis.
Just for services and fees.
Yeah, it's all going to become flows. And It's all going to fade into the background. You'll get a report on what you spend, but you won't realize exactly what you're spending as you're spending. As you scroll down a news article, you'll be paying by the line.
Is anyone else's mind just blown? Okay, mine did. My car's gonna pay for everything? What?
I mean,
That was a
put
great
yourself back in 1992 when this weird thing called the internet was starting to make news, and then someone said email. And you were like, why the hell would I ever want to type an email and log into a computer, dial in, and then wait, and then draft this email? Well, I could just shoot off a note or whatever. Why would I want my electric bill to not be printed? Why would I not, like, all of this was totally foreign to anybody. I mean, many of you may be too young to remember this, but like, this was a time where the thought of the internet was, who among us could possibly imagine Netflix with algorithms that tried to figure out what exactly you would like to watch next and enjoy? Like, we couldn't, nobody at that point in time could fathom what the internet would bring to our lives. And I think the same is true of cryptocurrency. We don't get it yet. I don't know what's going to develop. I just know it's going to be great.
Awesome way to end. I'm gonna ask maybe 3 questions, and audience Christina, I think, is gonna go around with some questions, so if you have a question. This is rapid fire. It's gonna be real quick. We just wanna get to know you a little bit more personally, too. Cats or dogs?
Oh, dogs.
Okay, that was easy. Beer or wine, or none?
Here.
Okay. Sushi or tacos?
Tacos.
Me too. Oh, the best. Favorite app on your phone?
Dash.
Such a fun, that was awesome. Favorite holiday?
Okay, outside of Dash,
Okay,
which
outside
is
of
just
Dash.
not
Outside of
fair.
Dash, yeah.
That's really not a fair one. Yeah, I'd have to say Twitter.
Ooh,
It's addicting.
okay. Favorite holiday?
Thanksgiving, because you don't have to do anything to prepare. You just make great food, hang out with family and friends. You don't have to go shopping ahead of, like, not major shopping. I mean,
Yeah.
you gotta go food shopping,
Not as
but
many expectations.
nothing better than just hanging out with the people you love and eating great food.
And last one, anything you collect
Uh,
other than cryptocurrency?
I collect passport stamps, but I haven't done a good job lately.
Okay, we'll work on that one for
Yeah.
2020. All right, who has a question?
Thanks, Ryan. What are your thoughts on smart contract-based protocols, the deal with dApps and all that, the viability of that, the usefulness of that in the future?
I think that the usefulness of it is quite limited and vast at the same time. And let me explain what I mean by that answer. There are very few use cases where it makes sense to build a smart contract. And the reason is because the risks are high. If you create a smart contract, you're basically creating unstoppable code. And unstoppable code sounds great until you can't stop it and there's a problem. And we've seen that issue crop up many, many times. There are very few businesses that will take that sort of risk. And so I don't think it's going to see widespread use among any service that we see today. First of all, legacy businesses have legacy infrastructure and legacy software. They don't want to rewrite that to run in a smart contract. Secondly, it's very inefficient. In a smart contract, that program is basically running in thousands of computers all at once. That's very inefficient. For most use cases, running it on one computer is fine, so you don't need that expense. And it's very slow. And so when you combine all of those things, well, what is it really good for? It's good for simple tasks that cost a lot in the real world, and you really benefit from that level of trust. The use case that I like to give as an example is credit derivative swaps. Right now, that information is usually sent through a private messaging system Big one is like IHS Market, and they charge anywhere between $26 and $35 per message. And that could be done in a smart contract very cheaply. It's repeatable, it's very simple. There's only 5 attributes to a credit derivative swap that have a definition, and the rest of it is all standard language. And so if you can record that on a blockchain in an immutable way with all of those attributes signed by both parties, that's a great use case for smart contracts. So I think that it has very few applications, but where it does have an application, it's usually something that's very simple and highly repeatable. And so it can handle huge volumes of those. And so I think that it will find a place, but we actually don't want smart contract capability on Dash. We're following a slightly different approach, which is called data contracts. It allows an application owner to define data hierarchy, data schema, data definitions within the Dash blockchain, within the Dash network. Store the data, not on chain, but in the Dash network itself, only on a few computers at a time. And then a hash of that data is stored on the blockchain. So just a very small amount of data is actually stored on the blockchain. And that allows it to get all the attributes of immutability without the expense. And that's what most businesses are really after. They're after a data store that their applications can all access and have agreement on the data itself. And so we think that that will have much broader applicability. It doesn't exist in the marketplace yet. And so we'll be the first to market with this concept of data contracts later this year.
Great question. Who else? Anyone else have a question? Oh,
I want to go back to the beginning when you were talking about leadership and kind of counseling kind of other leaders in your organization. The CEO, I'm not sure how big the company is, how much of your time do you spend kind of with vision and kind of looking 6, 12, 5 years forward versus more looking for your leaders to come up with those ideas?
Great ideas can come from anywhere. It's not necessarily the leadership of the organization that generates all the ideas. I'm more interested in the process that captures them, and then how do you vet them? How do you get agreement? A great idea may be a great idea, but if you don't have buy-in across the organization that it's a great idea, it's not going to go anywhere. So it's a combination of being open to ideas, recognizing their potential in terms of buy-in, recognizing their potential in the market, encouraging the people around you to actually explore those questions and come up with really good answers. I'd say the counseling bit comes more in counseling them on how to work together. It's not so much, vision is something that you set up once every couple of years and establish. You shouldn't be changing your vision, you shouldn't be changing your mission very often. It's an exercise that you go through. But once you have that, any changes that you should make should be minor, or you should have a major reason to go reassess that vision. Because it takes years to accomplish a vision. And so if you're constantly shifting to whatever is hot in the market or whatever buzzword is around, you're never going to actually get there on anything. You need to have conviction in where the market is going to be in 3 years and be willing to drive the whole team towards that. When it comes to the leadership pieces, that's more the day-to-day execution and resolving conflict, helping people to work through issues, helping them to identify where they're running into a problem with their own behavior. An example of this is an individual in my leadership team really felt like their role wasn't being, respected, and by another member of the team. And this person was very like naturally wants everyone to get along, very kumbaya, and that's a really good attribute in the role that they're in. But that's a great attribute up until the point where it isn't a great attribute. And they'd reached that point where they were basically hitting their head against the wall. Being nice wasn't working anymore. And they were asking for me to get involved. Now, I could have gone and solved the problem for them by using a hammer and saying, no, you will do, you know, what this person wants. But instead, I counseled her on how to go about solving this issue on her own. And, you know, it's basically that type of, it takes longer to do that. It takes longer to tell someone the steps that they could take in order to go resolve an issue. But it does two things in the process. One, it builds their capabilities. Two, it helps establish their reputation in the company. In other words, their ability to go influence next time improves. It builds respect for each other if they're all, you know, approaching each other in a team-like fashion and a professional fashion. And when I was at McKinsey, this is basically what my job evolved into as I moved up from associate to engagement manager, you know, eventually an associate partner. You spent more and more of your time just counseling people on how to approach the client, how to deliver hard messages, how to resolve a conflict that had devolved to the point that people were arguing, like you know, raising voices and things. And so, you know, it's that type of leadership that I think is important in building an organization that can survive you, basically. If I'm not around for a period of time, I need the team to have developed the skills to work together.
Anyone else have a question?
I got a question.
Okay.
So you brought up the, you know, of course, Silk Road, and for all the amazing things that cryptocurrencies enable and will continue to enable humankind to do, it also enables people to buy people. And human trafficking is a very it's a very terrible thing. And are there any guardrails, if any, that cryptocurrencies can establish in order to prevent those types of crimes from occurring?
First of all, something to understand about cryptocurrency. It is a push technology, and it is peer-to-peer. That means that the only person that controls whether or not my money flows to you is me. That's very powerful in some good ways. It also means that nefarious actors can't be stopped in that way. These networks really have no ability to conduct KYC, AML type, know your customer, anti-money laundering type of activity. What they do leave behind is all of the transactions. And unlike cash, you can analyze those transactions and you can determine the likelihood that repeat events are occurring. And as law enforcement discovers pieces and are able to identify an address to an individual, they can then tie them to other activity on the network. And ultimately, there are exit points and entry points to all of these networks. And there's pretty advanced analytics available at this point. Department of Homeland Security is all over this. They have contracts with many of the companies that do blockchain analytics on the Dash blockchain, and it's become incredibly sophisticated. It's really hard to get away with something these days without leaving behind traces that can get you in trouble later. And so what they're finding is that criminals are actually moving away from these networks. Whether or not they're using totally private networks like Monero, they may just be migrating there. But on blockchains that are publicly visible, like Dash and Bitcoin, there's very little illegal activity occurring, and certainly as a percentage, it's been dropping year after year. So it is an issue, but there are tools available to deal with it. Almost all money laundering for illegal activity still occurs through the traditional banking system. I think UBS got caught for what, $200 billion in money laundering recently. So like, cryptocurrencies are a drop in the global bucket on that. And I saw a statistic lately, or that recently, they believe only around 1% of money laundering is caught by the banks. So, people like to point at cryptocurrencies and say that we're the issue. Cash is the real issue. And
You're the new kid on the block.
yeah, and I think that there are very few people that are actually conducting those types of transactions. It still occurs, but it is a very small percentage.
I think we have time for one more question. Anybody want to be the last one? All right, you get to ask your question face to face.
Are there any projects that you're interested in, just from like a hobby or technology or?
I'm really interested in anything really peer-to-peer. I'm a big advocate of financial freedom. I'm a big advocate of reducing the intermediaries in transactions. So I've looked at, they're not projects, but they're companies that are sprouting up to service this, like Lending Club is a big interest of mine. I actually covered them as a short when I was with the hedge fund and first became interested in them there. I think there's just tons of fascinating projects across FinTech that are enabling new transactions that weren't possible before. Lending Club, by the way, is a peer-to-peer lending platform. You can buy fractions of other people's unsecured loans. And so they're usually using them to pay off a credit card or make a home improvement or something like that. You can earn, upwards 8-10% on, after loan losses on your deposits. And they're paying a lower rate as well than they would to the bank. And so both sides win in. You're basically cutting out a middleman. But there's all kinds of technologies in emerging markets that are really interesting. Technologies in India that allow people to get micro insurance policies that pay out based on the weather. They don't have to come out and check on their crops or anything. If they see that it was a dry season, you get a payment. And it's changing people's lives. It's reducing the risk that they have to follow, because 2 bad seasons and all of a sudden they're done. I mean, they're just bankrupt. And so I think there's many different really cool segments of the FinTech space. So that's what I'm interested in. I really recommend payments.com, and it has no A in it, PYMNT.com. Something like that. And they put out a newsletter every day. Sign up for the newsletter if you're interested in FinTech, and there's all kinds of interesting stuff there. And they have a Bitcoin corner for people that are interested in crypto.
It's a great resource for information. Well, Ryan, thank you so much for joining us tonight. It's been, you blew my mind away. I can absolutely tell your passion for what you're doing. Thank you for coming, everyone. Thank you for joining us.